Good morning, everyone, or good afternoon, depending on where in the world you are joining us from. My name's Neil Shaw. I'm the Global TVET Lead at the British Council, and it's my great pleasure to welcome you to this British Council Global Skills Spotlight webinar into skills levy systems internationally. So this webinar is the latest in British Council's Global Skills Spotlight series, which is a key part of our flagship Going Global Partnerships TVET program. This is very much an integrated program. It includes, amongst other strands, international policy seminars and research. And indeed, it was out of our most recent policy seminar in Cardiff last winter that the research work we're focusing on in today's webinar grew. You can find out more about British Council's Global Skills Spotlight Seminar and our wider Going Global Partnerships TVET program by clicking on the links that we'll put into the chat. We've got an excellent session planned for you today with expert international contributors. Skills levy systems internationally is a topic of huge interest and relevance globally, and we're very excited about the live research that we're going to focus on today. In a second, I'm going to hand over to Simon Field to present that research work that he is leading on for the British Council. Simon is a leading expert in TVET systems globally and on how the technical and skill systems of the UK compare. Until 2016, he had the OECD's work on, he led the OECD's work on technical education systems and has led and taken part in reviews in more than 30 countries. More recently, as an independent expert and director of skills policy, he has undertaken many studies for OECD, the ILO and UNESCO, as well as working for the British Council. Simon will spend around 20 minutes presenting his research. Then we will go into a panel discussion, also for around 20 minutes, which will be followed by a Q&A taking us up to the close. So without any further ado, over to you, Simon.
Thank you, and good morning. I'm talking today about skills levies in Africa, and these levies are typically a tax on employers with the money collected earmarked to fund technical and vocational education and training. And I will use the acronym TVET. It's that earmarking of these skills levies that makes them sort of different from other taxes. I say sort of different because the distinction is not always that clear, and I'm going to be saying something about that. Now, these skills levies are common globally. A recent UNESCO study identified 75 schemes around the world, with 1/3 of them in sub-Saharan Africa. So there's a real concentration in Africa. They yield a lot of cash, so they're really critical in funding TVET systems. And here, we're going to be looking at the skills levies in the 6 African countries in the British Council Going Global Partnership that have levies. So that's Botswana, Malawi, Mauritius, Morocco, South Africa, and Tanzania. In the 3 other partnership countries, in Ghana, there's no skills levy. In the Sudan, there is no levy, although one's been proposed. And in Mozambique, a skills levy is currently being developed. Now, this new work rests on extensive previous research, a 2020 study of Southern African countries undertaken by Robert Palmer for the ILO, a 2022 study by UNESCO in which Robert was also involved, and you're going to be hearing from Robert himself in the course of this meeting. And most of the data I'm going to show you comes from these exercises. And what I'm going to do now is to first describe how these levies work in the countries we're looking at, and then go on to look at some of the policy challenges. Now, to start with, there are 2 aspects to levies, rather obviously. how the money comes in, how it's collected, and then how it goes out, how it's spent. Now, let's start with how the money is collected. Usually the levy falls on payroll. Uh, uh, Let me go back one slide. Uh, and the levy falls on payroll as a percentage of what employers spend on wages. And this is illustrated here with the rate of levy being 3.5% in Tanzania, but usually less than that, 1% in Malawi and South Africa, and as little as 0.5% in the UK. And Botswana is not in this picture because its levy falls not on payroll, but on turnover. Now, not all employers have to pay the levy. Those exemptions are really important in policy terms, and I'll be saying quite a lot about that. Now, usually small employers are not expected to pay. That's because it's not worth the effort, either for the employer or for the tax collector, in chasing small amounts of money. So in Morocco, for example, employers with 10 or less workers don't have to pay. Also, in 4 of the countries, public sector employers, government and some other parts of the public sector, don't have to pay. And I'll come back to the question of whether that's a good idea. So that's how the money is collected, but how is it spent? Well, perhaps the biggest element is funding the TVET system. For example, in Morocco, it is the main source of funding for TVET, and I've given some other examples in the slide there. Now, in addition, what many countries do is to allow employers that pay into the levy to claim money back for the costs of training their staff. So in Mauritius, for example, an employer can claim up to 75% of their costs of training from the levy fund. So as well as funding the wider TVET system, there is this very specific call on levy funds in at least some of the countries. But the money also goes on other things. And administrative costs can be quite substantial. In the chart, you can see that as much as 40% of levy receipts go to administration in Malawi. But sometimes part of the money goes elsewhere. For example, in Tanzania, most levy receipts are retained by the Ministry of Finance, and not all of it is spent right away in some countries, and that becomes a surplus. And we'll come back to this point. So in a nutshell, skills levies usually collect a percentage of employers' payroll. That money is then used to fund TVET and to reimburse levy-paying employers for their training efforts. But there are also some other expenditures. And now let me turn to policy. And I'm going to do that quite selectively by looking at 3 key questions. First of all, why use skills levies at all as a method of funding? Secondly, where we have levies, how do we manage the challenges, the difficulties that arise? And thirdly, some issues about who pays the levy and who benefits. And in answering these questions, policy cannot be one size fits all. It depends on the country. And there are 3 things here I would emphasize. First of all, government, employers, and the level of trust. The whole point of the levy is to promote trust by showing employers where their money is going. So the extent of trust is a key background factor. Then government institutions, how effective are they? Running a training fund is really demanding. And then a really fundamental issue of skills needs. Skills needs not only in the big employers, but also in the small employers, in the informal economy, for disadvantaged groups, hugely important issues. And all those elements of context bear on how to develop levy policy in an individual country. So let's start with the basic question. Why do we use skills levies? And the answer depends on our aims. Are we looking to the levy as a means of funding the TVET system, as an alternative to ordinary taxes? And that's probably true for many of the African skills levies I'm looking at here. Or are we looking to the levy as a way of encouraging employers to do more training, pooling training funds in the collective interest? And that's often also a relevant aim. The two things are not inconsistent. But first of all, why use a skills levy rather than ordinary taxes to fund the TVET system? Well, let me let you into a big secret. No one likes taxes. There is some evidence that actually they're especially unpopular in Africa, although that appears to be changing. And many of you will have noticed the recent events in Kenya, where the government withdrew its tax proposals in the face of intense public opposition. And there are ways of measuring the unpopularity of taxes. And here's one of them I'm showing you. And the chart shows the percentage of people who trusted the tax office either just a little or not at all. That's an indicator of opposition to taxes. And you'll see there in the Sudan over on the left, very little trust, rather more at the other end of the chart in Mozambique and Botswana. So the really big advantage of earmarking a tax, like a skills levy, is that it's more acceptable than an ordinary tax. So, for example, when one UK survey asked people if they'd be prepared to pay 1% more in income tax for government services, only 4 out of 10 agreed. But when they were then told that this money would be used to fund the health service, twice as many people, 8 out of 10, were happy with that. And that's one reason why in Ghana, for example, a levy earmarked to support healthcare has been used very successfully to fund the Ghanaian health service. But set against that huge advantage in terms of acceptability, earmarked taxes, including skills levies, have lots of big problems. So let me tell you about some of them. And the first of these is that for an earmarked tax, there's no relationship between the income you get in and the spending requirement. These things can move in different directions. And over time, that means that surpluses or deficits emerge because the spending need may be either less or more than the income. And those surpluses and deficits cause all kinds of problems. Sometimes, even for example, in the case of the Ghanaian Health Service, despite the general success of the health levy, government has increasingly been obliged to top up the health service budget from general funds. And that's because the levy is just not providing enough money. But one of the biggest problems of earmarked taxes, like skills levies, is that sometimes they come to be indistinguishable from ordinary taxes. And that's because surpluses are sometimes diverted, or the money collected flows into a larger budget, perhaps simply displacing the need for other taxes. So it can be really hard to say if the earmarking is making any real-world difference, whether it wouldn't be just the same if the earmarked tax had been just an ordinary tax. And that's one reason why I said right at the beginning of this presentation that skills levies are only sort of different from an ordinary tax. So there is a question over whether a skills levy is the best way of funding the TVET system. And sometimes when the resistance to general taxation is very strong, really a levy is the only practical way of funding TVET. But if that's not true, where general taxation is more acceptable, there is a case for using that approach rather than a levy to fund TVET. Now, the other main aim of skills levies is to encourage employers to train their staff. Why can we use them in this way? Well, employers left to themselves will often not provide enough training. And that's because any trained member of staff can use their 2 feet to walk away with their new skills and work for another employer. So the benefits of training are shared, and they don't necessarily fall to the employer that offers the training. And one way around that problem is for employers to pool their training efforts when they all contribute to a training fund and then all benefit from the training. And that can be done either nationally or by industry sector, sometimes in sectoral training levies. So there's a really good rationale for this aspect of skills levies. But of course, the business of collecting the levy and then reimbursing employers for their training efforts can be so burdensome that the cost of this bureaucracy can outweigh the benefits. Now, my second question was, how can we manage some of the challenges of skills levies? And I'm going to be looking at two problems. First of all, let's remember that the big advantage of the skills levy is, as I've just been saying, is that employers, when they pay into the levy, can see what's happening to their money. They can see that it's going to fund training. And that's what makes the levy acceptable. But that means following through and really showing those employers what happens to their money. And that doesn't always happen. And sometimes it's because the data is not published. Morocco, for example, doesn't publish financial information about their levy. But often also it's because the information is hard to understand. It uses the language of accountants, and regular employers won't understand this. So here is an imaginary example, a simple pie chart setting out the information needed. We should be able to see how much of those levy receipts go to administration, how much is returned to levy payers to reimburse them for their training, how much is spent on different TVET programs, and how much is left over as surplus or perhaps a deficit. Now, this leads us naturally to the issue of surpluses. And you might think that surpluses are not a bad thing. Surely it's good to have enough money. But in fact, surpluses are a problem. A surplus often ends up, for understandable reasons, being used for something else rather than TVET. For example, in South Africa, when the surplus had built up, it was used to help support poorer students in tertiary education. And that may be a very good use of the funds, but it does tend to undermine the principle of an earmarked fund, the confidence of employers that their payments are going to be used for training. But also a surplus makes it really hard to use money wisely. There's no pressure to seek efficiencies when funds are in surplus. So we need to manage and limit surpluses, for example, by regularly reviewing the levy rate as recommended by the recent UNESCO report, and reducing the rate when necessary, and by having some system for handling surpluses when they arise, for example, by returning some money to the finance ministry. Now, the third and final question here is who pays and who benefits from the levy? And here we're going to look at two issues. First of all, I've already talked about how many levy systems allow employers who pay the levy to get back some of their levy payments when they train their workforce. And this encourages the employers to train, and at the same time, it makes the levy more acceptable to them. But levy payers are, of course, usually the big employers. And very often, some of the most pressing skills needs are found not in the workforce of the larger employers that pay the levy, but rather among those working for smaller employers, sometimes in the informal economy, and sometimes among those outside the labour market altogether. Recycling funds back to levy payers does nothing to address those needs. So there also needs to be support from TVET and levy systems for those with the greatest needs. It's interesting to see how this argument has played out in England in their levy experience over the last decade. Initially, their apprenticeship levy allowed the large levy-paying employers to have better access to the training fund than the smaller employers. That seemed logical. But in response to the very good argument that this neglected the smaller employers, recent changes mean that the smaller employers can now access 95% of the same resource as the bigger employers. And that makes a lot of sense in policy terms. But of course, it also means that those who pay into the levy fund now only have a kind of very marginal 5% of privilege. A second issue, sometimes public sector employers don't have to pay the levy. And that arrangement applies in 4 of the countries we looked at. And one rationale for that arrangement might be that it's just not worth shuffling money from one government budget, a government employer that has to pay the levy, to another, the levy fund that takes receipt of the levy. So on those grounds, it's better to exempt the public sector. Another argument might be that a public sector employer would otherwise, or all public sector employers would otherwise have their budget squeezed by the levy and so have less money for their main functions. But set against that, there are some rather strong arguments. This exemption has both the appearance and, in some sense, the reality of unfairness. A hard-pressed private employer might be rather annoyed that government is not carrying the same burden that it chooses to impose on others. And for example, if government is deciding between delivering a service directly within the public sector or contracting it out to the private sector, a tax imposed only on the private sector, which is what in effect you have, will bias that choice. Also, one of the functions of the levy is to encourage employers to train, and those incentives are surely needed in the public as well as the private sector. So there is a case for looking again at this and perhaps extending the levy to the public sector. So to conclude and summarize, skills levies can be an acceptable way of funding TVET, but they come with a whole barrel load of problems, and those problems tend to increase over time. So it's worth thinking about the alternative of relying on general taxation. It might not work, but it's worth thinking about it. Levies can also work as a way of pooling employer funds to pay for training, but some care needs to be taken over whether those benefits justify the administrative costs of a levy. Now, where levies do exist, transparency is really important so that everyone can see where the money is going. Surpluses need to be minimized and carefully managed. And while there are all sorts of advantages in using a levy to fund training among levy payers, let's not forget about the rest of the economy. Many of those with the greatest need for training will not be working for the large levy-paying employers, and they have needs too. And finally, have a think about dropping those public sector exemptions. Thank you very much.
Thank you very much, Simon, for that outstanding, I think, presentation. A very rigorous and insightful piece of research, which is presented so clearly and engagingly. Thank you very much, Simon. It's now my pleasure to introduce Rossi Vogler to lead our panel discussion. Rossi is a senior advisor in the TVET team and leads our research work. And Rossi is very much the driving force behind the research into skills levy systems. Just before I do hand over to Rossi, just a reminder to please add any questions or comments that you might have into the chat so that we can then feed those into the discussion. Rossi, over to you.
Thank you for the introduction, Neil, and good morning, good afternoon to everyone. It is my pleasure to welcome you to today's panel discussion on skills levy systems. We are fortunate to have with us a distinguished panel of international experts, each one of whom brings a wealth of knowledge and practical experience on the subject. Joining Simon, who has already been introduced to you, I'm delighted to introduce Robert Palmer. Robert has over 20 years of experience in policy-oriented research and has consulted for major international organizations such as the World Bank, UNESCO, ILO, the African and Asian Development Banks, amongst others. His recent work includes a global review of Levy Finance training funds covering 75 countries, published by UNESCO 2022, and a similar review of the Southern African countries published by ILO in 2020. Great to have you with us today, Robert. Next on the panel, we have Dr. Haris Nilai, who currently heads the Research and Projects Division at the Human Resource Development Council of Mauritius. Dr. Nilai is an applied economist, and his research and projects interests cover economic development, human capital and skills development, as well as strategy and innovation. Delighted to have you with us, Dr. Nilai. And finally, I'm pleased to introduce Mr. Muthuso Mazole, Director of Funding at the Human Resource Development Council in Botswana. Mr. Mazole is responsible for coordinating the funding mandate of the Council and has a wealth of experience in skills development levy systems, as well as he's managing the Botswana Human Resource Development Fund, currently aimed at upskilling employees in the private sector. Really great to have you on the panel, Mr. Mazole. Before we start the discussion, I'd like to remind the audience that we will have a short Q&A session at the end of the discussion. And if you have any questions or comments for the speakers, please share them in the chat and we will pick them later. Right. My first question is to Mr. Mazole and Dr. Nilai. We've heard the excellent summary of Simon's research to date and the emerging policy recommendations he's shared. In respect of your specific country context and your experience with the skills levy systems in your countries, are there any facts or statements or concepts that Simon shared in his presentation and you particularly agree or disagree with? Dr. Nilai, perhaps you can go first.
Thank you, Rosie. Good morning, everyone. I will provide some complementary information on the use of a training levy in Mauritius. It is currently managed by the Human Resource Development Council, and as per the Act, it can be used to further a particular object. Actually, it's a quite englobing one, for promotion of a culture of training, lifelong learning at individual, organizational, and national level to promote employability and productivity. So it's quite generic and general in nature. Generally in Mauritius, levy expenditure focused on training cost reimbursement, but over the last decade or so, the levy has been increasingly allocated for enterprise-led skill development grant schemes. The fund is mobilized for a levy rate of 1.5% of total basic wage and is remitted on a monthly basis to the Human Resource Development Council. Rate reviews are sort of internally inbuilt, as the receipts of the levy not only go to the HRDC, but also goes to a workfare program. So as it is today, only half of the levy collected goes to the HRDC. So effectively, we're talking about a rate of 0.75% going to the Human Resource Development Council. The council is governed by a tripartite council, and 40% of councillors are basically from the private sector. And we do have a sort of dedicated National Training Fund Committee looking at the overall operation and training incentives offered to employers from the rupees derived from the levy. Expenditure of the levy monies be it for levy schemes themselves and other skill development schemes are audited and published yearly through annual reports and financial statements. So this ensures transparency of expenditure of the levy money. Now, I would like just to refer to the pie chart presented by Simon early on. So, and I just want to transpose it to Mauritius. Figures that are available, published figures. So financial year 2023, 59% of the levy collected went to reimbursement of training costs. And around 23% basically went to other research and other skill development programs. So when we talk about money going to employer, in a nutshell, we can safely say around 73 to 75% of expenditure was dedicated to the skills needs of employers in that particular financial year, 2023. So we can sort of safely say that the levy is an earmark levy. So around 55,000 trainees benefited from the levy in that particular year. And maybe in terms of industrial sector expenditure, the retail and wholesale, manufacturing, financial and accommodation sectors accounted for around 55% of levy expenditure in that particular financial year. And these four sectors in total accounted for around 45% of global value addition in 2023, just to give you an indication about expenditure and proportion of GVA. In terms of fund effectiveness, just to sort of wrap up, internally at the HRC, we do conduct internal reviews, based on levy data. We do have some input-output metrics for skill development programs, less so for levy programs. And we do also conduct some, perception surveys on the usage of levy from employers. But, if I were to just speak on one of the recommendations from Simon, one area where we really need to significantly improve is to make the levy more usable by small enterprises. To be fair, we are underusing the levy and we are under investing in small enterprises as well. So as a concluding note, I would say that in Mauritius, there's need to improve the effectiveness of the levy system. Thank you for your attention.
Thank you very much, Dr. Neela. Really interesting to hear the specifics in Mauritius and the reference you just made about that recommendation. If I may go to Mr. Mazola now.
Thank you very much, and good morning, good day, all. Yes, I'm indicated Muthusi Masola from Human Resource Development Council of Botswana, and I'll just speak briefly because, as you rightfully asked, yes, I do concur with the specific issues that have been raised in the presentation, but maybe just to bring in some additional information to indicate that it was reflected that Botswana used to have surpluses to the tune of about 50 million pounds. Just to indicate that this was in the past when the levy used to accumulate surpluses. But in the recent past, we've seen the percentage of levy spent on collections going up to about 60%. So you can see that from historically when it was about 20-30%, now in terms of the utilization of the fund, it has gone up to about 60%. So it calls in that we need to be careful around the sustainability of the fund. And the other issue that has been is rising to be of concern is the cash flow challenges that most levy payers indicate. Because as the presenter indicated, you contribute first into the fund, and then you spend on training your employees, then you come for reimbursement. So this is the key issues that some of the levy payers have been indicating that we may need to review the model so that it does not result in cash flow challenges that are hefty, especially for our smaller organizations. And the other key issues that would like to bring to question is that as was indicated by Simon, a lot of other countries use the payroll method, while Botswana, under the Botswana system, we use the turnover method. Yes, there are some levy payers who've really indicated that there may be a need for us to reflect further and see the advantages of the payroll method over the turnover method. And that review is currently undergoing. That we'll be happy to share as soon as the research has been concluded. I think for now, I'll leave it here so that we can engage further during the discussion. Thank you.
Thank you, Mr. Mazole. Really interesting points you made about the sustainability, but also this specific in Botswana context about the turnover method rather than the payroll and the review you're currently undergoing. And I think there's a lot of countries, Botswana is not on its own, actually currently reviewing their approaches to funding and how to best utilize skills levies. UK as well as a number of other countries. But I'd like to bring in now Robert into the discussion. Robert, you have conducted extensive global research on the subject recently. What are your observations? What could be considered a prerequisite of a well-functioning skills levy system?
Thanks, Rossi, and thanks to all the previous speakers. Lots of great points, and hopefully I won't repeat too many, or maybe we'll reiterate the important ones. So I want to mention 3 key points at this stage. So one is issue related to governance, another issue related to transparency, another issue related to assessing results. So first, getting the governance right is arguably one of the most important preconditions for a well-functioning levy finance training fund. Employers very much need to be heavily involved in the process, the whole process of determining the type and amount of levy rates, the fund purpose, the objectives, the disbursement approach. And, experience across countries really shows that simply having, a good representation of employers on the training fund governance mechanism doesn't itself lead to a more effective training fund if they don't have a real voice and a good level of autonomy. So that's the first point. The second precondition, something that Simon picked up on, and something also that I think Dr. Nilo mentioned as well, the issue of transparency. So transparency in levy collection, transparency in administration, transparency in disbursement, and in results. Building trust, incredibly important. And, obviously having a transparent process, how the funds are collected, how much funds are collected, where they're spent, what results are achieved is the second precondition, I would argue. The third one I'd mention is around assessing results. So again, looking across a number of different countries, the main approach to assessing results is really about reporting numbers trained, numbers of beneficiaries reached. We need to move beyond that particular metric, so that there's more investment in tracer studies, there's more investment in employer perception studies, so that we can have a slightly more rigorous approach of assessing the actual results of the training funds.
Great, thanks, Robert. Really useful recommendations and observations of what makes a good and functioning skills levy system. But on the other hand, what should countries be mindful of when they establish or reform their skills levy systems?
Okay, so I mean, some of these 2 questions obviously partially overlap, but again, looking at sort of global experience, then there's maybe 5 issues that could be flagged up, thinking about establishing or reforming a levy system. So the first one relates to the purpose of the fund. Many levy systems across many countries have very broad and general purpose statements. And that can often lead, not always, but it can often lead to a dilution of impact, because if the levy simply says, we're gonna finance skills development, then it can be so broad that you can park anything in that. So that's the first thing, getting clarity and a better focus on the purpose. And really, I mean, the purpose of an employer-financed levy training fund should really link directly back to the skill constraints that firms face. They're being asked to pay for the levy, so it needs to really clearly link back to the constraints they face. And those could be, those could be addressed through either increasing training in firms or through, strengthening the pipeline of employees through improved pre-service training. And obviously, the employer's involvement in designing the curriculum for pre-service training is linked into how effective that would end up being. The second point I'd like to mention is about which I touched on before, about the key role of employers. The mindful of governance and management. Those who pay need to be in the driver's seat. When it comes to employers, I've mentioned the significant role of them. For government role, arguably, they have at least two main functions. One is to try and encourage investment in training that may not otherwise have been a priority for employers. And secondly, when we're talking about sector training funds, and obviously most training funds in sub-Saharan Africa are national training funds, but in South Africa, we have sector training funds, and the role there of government is to try and address coordination failures between sector funds. Also, to mention the governance front, really important to be mindful of conflict of interest. There's a lot of example across the African region and beyond about the levy administrator also being a provider of training, a regulator of TVET often, and so if you're the collector, spender, trainer, and regulator all in one, then there's a kind of a key issue to be mindful of there. I'll try and accelerate a little bit. The third issue is about assessing fund effectiveness and efficiencies. I mentioned about being mindful of the effectiveness of the training fund, what results are you getting? But equally, it's important to ensure that the efficiency of the training fund is also measured and tracked properly. So in terms of the application process and timeline and uptake rate and issues and indicators like that. The fourth issue, when you're looking at establishing or reforming a training fund, we mentioned about the type of levy. So consider, is the type of levy which you currently have, and yes, 80% of all levy finance training funds around the world actually are payroll levies, but there's a good proportion that are not. And the turnover method is one, but there are others. Several countries use the proceeds of foreign worker permits, for example, to finance the training fund. In terms of the levy rate, there isn't a magic number, but majority of countries' national training funds around the world, about 80 to 90% have a levy rate of 2% or less. So that's maybe a percent, figure that people want to keep in mind when thinking about what should be set. And definitely periodically reviewing that rate is really important to address some of the issues that Simon mentioned about, if there's going to be a surplus or perhaps there's not enough money going to the training funds, and maybe there needs to be consideration of increasing the levy rate. Obviously, those kind of periodic reviews absolutely need to involve employers centrally, because they're being asked to pay. And if they're not happy with the process and not happy with the effectiveness of the fund, it's going to be difficult to convince them to pay more. There are examples across the world of training funds have collapsed because employers have not been happy with the process and output. So, definitely, keeping them involved in the process. And very lastly, I think, thinking about disbursement mechanisms within the training fund is really key. So it's not just about trying to collect the money and how is the money actually spent? What mechanisms are used to disperse the funding to which groups? There's examples of use of funding windows, of proposal calls, of competitive bids, and all sorts of different approaches which can be more useful to promote better results. And just very, very lastly, acknowledging that some form of cross-subsidization can be very valuable. We talked about small firms, large firms, who pays, who doesn't, and lots of examples across the world about how non-levy payers are benefiting from training funds. Again, there needs to be agreement with the levy payers in the first place as to what that proportion, how much of the levy that they're actually paying goes to non-levy payers. Maybe I'll end there. Thank you.
Thanks, Robert. That's extremely insightful. And before we go to the audience for any comments or questions to anyone on the panel, I very quickly would like to come back to Dr. Nila and Mr. Musole in respect of what Robert had just shared. How does this resonate with you in your country context? Very, very briefly, if you would like to add anything.
Yeah, thank you. I think a training levy, as far as Mauritius is concerned, is an essential socioeconomic, instrument for skills development. But that being said, with dynamics in the world of work, it is imperative that schemes under levies evolve to be more responsive to current and, more importantly, as well, future needs. We have to be cost effective. And maybe two take homes from Robert and Simon is one, maybe to increase through the levy investment in Tibet, and maybe to be more systematic in terms of evaluation and assessment of results, in terms of real metrics, input-output metrics. So that would be a couple of take points from my perspective. Thank you.
Thank you. And Mr. Musole, anything from your perspective?
Yeah, thank you very much for the insight, Robert. Two quick points. One is that indeed, we need to measure the effectiveness and the impact. Just to indicate that in the Botswana context, that was done. It was done around 2019, 2020, just to find from levy payers if their response to the effort, and they were quite positive about it. Even in terms of the beneficiaries who are employees, they were also very positive because they were indicating that under the normal training plans by the organization, they may not have benefited from training. So we saw some positive output from that impact study. But I think it's been over 3 years now. We may need to carry another review of the same. And then just also to indicate that, yes, indeed, it's important for the purpose to be clearly identified. As for the Botswana case, this was clearly articulated in the Act. That is the proposal of reimbursing employers. And the governance structures as well are key, where we have the board, the HRDC board, overseeing the operations of the fund, just to get control around the fund. Thank you very much.